Thanks everyone. We'll get started. Daily wrap for Thursday, 30 July. Basically, it was a pretty crazy last night in markets. There was a lot going on. First and foremost, the US Fed had their latest rate decision, which was a hold, which was widely anticipated. However, what was interesting is there was actually some dissent among officials. So they've got 12 officials on the FOMC. They all vote for what they think the rate decision should be. Of those 12, 3 of them voted for an immediate hike that cycle, which shows that, and the key message out of that was inflation is still a key issue that needs to be sort of held under control and is what's driving markets at the moment. So it showed there's still a hawkish undertone. Markets had kind of anticipated a possible surprise hike, but certainly likely hikes later in the year. They were expecting 2 hikes by December, but those have since been pared back a little bit, and now markets are only expecting around 1 hike for the rest of the year. So there's kind of a bit of a divergence in opinion of whether they stay hawkish and keep raising rates to fight this inflation, or whether they just sort of need to remain cautious and hold it for now and see what happens. So there's sort of a lot of choppiness in the waters for that. What it meant was US equities sold off, but importantly the dollar had a big decline because markets were expecting a really hawkish sentiment to hold, which kind of fell back a little bit. Also on the Australian side of things, headline inflation came in surprisingly soft yesterday. So it was at 4% and it actually dropped down 20 basis points to 3.8%. Again, markets were expecting that to hold firm at the 4%, given everything going on in the Middle East at the moment. The key figure the RBA will look at with their rate decision in a couple of weeks was the trim mean, which takes out all the outliers, and that held at 3.6%, despite expectations it might actually jump up a bit. So that's really pulled back expectations of a hike in a couple of weeks, as markets have basically priced that out now. They're expecting it to hold. And interestingly, they now put at less than a 50% chance of any future hikes before the RBA starts easing rates back again. So we're seeing these central banks really struggling to understand the inflation picture and what the actual forward effect will be, given how turbulent the conflict has been in the Middle East. So again, with any hopes of a rate hike next month dashed and future rate hikes now in question, the Aussie dollar has declined as a result. And then of course, it wouldn't be a market wrap without Trump coming out and saying something to spook markets. So again, he's come out and said he'll continue strikes against Iran. Iran attacked some US troops in the Middle East, so he said he's got to hit back hard. But the important thing to note is that the US stockpile of crude oil is now at its lowest point in decades, and it's been falling for 18 straight weeks now. So they're now getting at a critical point where, whether Trump likes it or not, they're going to need oil out of the Middle East. And so the passage through the Strait of Hormuz, the passage through the other channels, and securing that safely is going to be of utmost importance, and will kind of force his hand a little bit whether he likes it or not. Looking ahead today, we're going to get some more US tech giants and their earnings reports release. This is what the equity markets are looking at more closely than the Fed decision at the moment, that tied with the oil. So this will have a big impact on the indexes, particularly the tech-heavy NASDAQ, which we'll explore a bit later on. Then over in the UK, they'll have their own rate decision today, again expecting to hold at 3.75%. They're expecting 2 of their 9 officials to vote for a rate rise. If that comes in higher, the sterling could get a bump up with expected future rate rises, but if that holds as expected, it sort of ties in with what's expected in Australia and what we've seen in the US. Then I guess the key bit of data today is the US core PCE, which is the Fed's primary inflation gauge. That's going to print later tonight, I think 10:30 from memory, Australian Eastern Time. Expectations that it's going to slightly soften 10 basis points to 3.3%. Again, this is another data point. The waters are choppy, but if it does soften, the US dollar might recover some of the losses it had yesterday. So it's going to be really interesting to see how it all plays out. In terms of looking at the big movers, obviously an incredible amount of volatility yesterday and overnight. We saw oil was declining this week, and you can see the massive jump up yesterday based off that Trump news and the Iranian news. It does seem like other countries are trying to step in and sort of steer the path towards resolution. However, these two sides are continuing to posture their own positioning and maintain the strength over one another. Like I said, equities being hit hard as a result of those oil and the inflation pressures. And the key backdrop point to remember is just the AI story as well, and how markets are sort of pushing back against the huge expenditure in AI infrastructure and basically just calling companies out and saying we want to see the returns now. And so it was Meta. I can't remember. I think it was Meta came out overnight and said they're increasing their expenditure in AI, and they just got turfed out. They lost 4%, whereas another company said their cloud division has really gained returns and are now delivering results, and they only got a 0.5% bump up in their price. So you can see the market really punishing the AI expenditure and expecting to see results. So that's what's driving the US equities. And then again, on the Aussie front, the soft inflation drove down the Aussie. The euro is pretty stable at the moment. Got some gains from the soft US dollar as well. So we saw a big jump up in the euro-Aussie pair. And then I guess looking at the VIX, which is in itself a volatility index, this just highlights how choppy yesterday was, how much action there was. What the VIX is looking at is the strength of expected price moves in the S&P 500 over the next short term, the 30 days looking forward. It touched above 20 yesterday, which is sort of the key inflection point, whereas markets move from stability into getting into a more risky and in a more fearful state. So that's one to monitor. With more conflicts, rising oil prices, and the AI story, it's really got to impact this as well. Chart of the day, looking at the NASDAQ, which we visited on Tuesday, how we identified it was in that falling wedge, and it had two options to either break out that wedge and continue on, or with the Fed decision and the AI expenditure in these earnings reports be the key factors. And it was the latter that has prevailed. So what we can see, it's broken below that wedge and really dropped off a lot. And so we can see it's turned into a bearish reversal. The NASDAQ is actually in a technical correction zone now, so it's 11% off its highs previously, as you can see. And again, this is stoked by the oil price surge. US Treasury yields, 30-year yields are at all-time highs as well. They're incredibly high. The Meta was the company that struggled in the earnings report with the market reaction. They increased their capital expenditure floor, which the market is just really not liking at the moment. And Microsoft was the one that expanded their growth, their cloud growth. So Apple and Amazon are reporting today. If we see their revenues increase without much expenditure, forecast increase, this could help slow this down. However, they follow suit with what Meta came out and said, we're going to increase our spending on AI, we're going to build out our infrastructure, then expect to see this fall even further. The next key point is this 200-day moving average here, this pink line. This is going to act as a resistance point for the price. if those earnings results come out poorly and there's no change on the oil front, it keeps getting worse. The price is going to test this point. If it breaks out below, it could go even further. So this is going to be really interesting to watch for the remainder of the week. Then article of the day, again, a little bit boring, but it's really important to know as this is driving markets. It's just the 5 big takeaways from the Fed decision yesterday and sort of what this means moving forward as a whole. So it'll take you 1 minute to read through it, but it's worth having a look. Cool. A lot going on. Sorry, I rabbled on a bit. Any questions out of that?
I had a question around the US oil reserves.
Yeah.
I thought that the US had taken moves in Venezuela to try and get some certainty of flow from there, and then they get some from Canada.
Yeah.
Why wouldn't they be leaning into getting more from those two sources?
The oil quality out of Venezuela is really poor, and so they need a lot of infrastructure to be able to get it up to a usable level. They're probably not wanting to spend on that at the moment. It's easier to get usable oil out of the Middle East, and probably more so through the Canada pipeline. Again, there's a lot of posturing with Canada at the moment with their trade relations, so he probably doesn't want to give them an upper hand by relying on them for their natural resources. But yeah, I think that the key thing was the Venezuela oil needs a lot of refinement to be at a usable level, so they can't really rely on that. Because again, the lead time to get to that point is probably going to be too late to help their existing stockpiles.
Yeah, it's crazy that he slapped tariffs on Canada. Like, you would have thought he would have tried to keep things neutral then.
Yep, anyway. Yeah. Oh, I think if we use rationality for any of his decision making, we'll go insane. Beautiful. Thank you very much, everyone.